Good morning, ladies and gentlemen. Hi, everybody. Welcome back. I'm sure it's going to be in just an absolutely extremely busy day here, ladies and gentlemen. Almost certain of it. Almost certain. Market is about to be absolutely Mick booming today. The Mick booms. Cannot wait. Gonna be a lovely thing. Actually, speaking of that, I think I'm gonna go get a sweatshirt on because it's darn chilly in here. Toadster. Good morning, Mr. Toadster 12. Good morning. Good morning. I'm gonna be right back. I'm chilly. My office is cold this morning. It's freezing outside here in Michigan. I'm gonna get a sweatshirt. Damn it, I am muted. Dang it. Sorry, I went to get a sweatshirt on and it was open doors, and you never know, the dog could go crazy. My bad, my bad, my bad. Anyways, like I said, it's been a while since I've streamed. It's been a couple days. I just have to stay muted or else you guys won't text into the chat. So yeah, basically, I'll just repeat everything I just said in 2 seconds, which is we're just following Bitcoin up from the previous lows. So, they're already doing that lane. Oh, there we go. Yeah, we're just following Bitcoin up, previous lows, right? VWAP, that's how we're creating every high or low up. And then we're just looking at the all-time high volume-weighted average prices as our bearish trend down. So Bitcoin's in a bear market. Its best case scenario long move is up into the box right now of about 100,000, 104,000. But obviously each week that goes on, this box calculates lower. So today's Friday. So after Sunday, this is going to calculate downward probably a little bit, et cetera, et cetera, et cetera. So we're still in a bear market. Nothing's really changed. There's a lot of articles talking about 4-year cycles, this, that, the other. I don't know. Don't really care. I just follow what I see on the chart. Maybe the cycles aren't repeating. Maybe they are. We'll see. Who knows? But we'll just follow what we follow here and we'll be good to go. Which is, AKA, Bitcoin's in a bear market. It's going through a counter bounce right now. It still has a lot of rolling resistance that most of the planet doesn't watch or think about or know about. So that's what we're going to watch for resistance for the time being. We'll change back to long-term long bias when we think it makes sense, which I don't think is right now. All right, that's all we got to know on Bitcoin. All right, over to the market. So obviously the market is up a little bit, kind of ish. Not really, market's not really doing anything too fun. We did have ultimately a nice long move take off yesterday, all said and done. So that's cool. Does the market truly establish a long bias trend, or are we going to kind of stay in this awkward trading environment? I don't know. We'll see. I just follow the system. And right now the system says that the market is positive. I still have some long on from yesterday, UPRO, 3x leverage ETF. It's up, it's green, it's nothing massive. We would need a bigger move than this to make it actually like a good trade. Well, I mean, I guess it depends. If you think about things in terms of day trade, I mean, I ran the entire market move up long, but in terms of like a swing up, we would need this to do significantly more to be good. But anyways, yeah, so we'll just go to the 30-minute chart as we normally do. Again, it's a repeated system, never changes. It's the same exact story. Well, kind of over and over and over, which is yesterday market was flirting with the over-under. So once it established that it wanted to remain over the 50 SMA, then there goes your long move up. So, it doesn't look like a lot. Again, it's just one line. I know we're not necessarily looking at bull flags, bear flags, volume, MACD, this, what color is the moon, or what color is the tie that Jerome Powell's wearing today. But ultimately, market up over 50 SMA, break over, pulled back, algorithms hold. There's our long. All right. So I'm still long bias the market since yesterday, so on and so forth. We talked yesterday about things being a little choppy. They kind of still are, is. So till the market breaks down, until volatility really breaks out, I mean, this is just the market we're going to have. So we're just fingers crossed that the market stays up, or it doesn't really matter, I guess. I don't know. I'm just thinking to myself, what would I like to see? Well, number one, I'd like the market to go up, because who doesn't like to see the market go up? Okay. Number two, I would not care if the market goes down, because if it does, then it creates another buying opportunity. And then C, we would just love to see a Santa rally, so there's that. Christmas is in like 2 weeks. So, how does the Santa rally, if we're going to get one, form up over the next couple days, weeks? Who knows, right? I don't know. Do we even get one? Probably. Maybe. Markets always go up and go down, so any sort of decent 2-day stretch we have over the next week and a half, the news could easily print that as a Santa rally or someone, or psychologically we could all just assume it is. So, we'll just see how the market shapes up. As always do, if it's over the 50 SMA, bullish, below, bearish, and that's just what you do. Yeah, that's that. So, with the market, SPY, being above the 50 SMA, we are supposed to be leaned on the long side. So there's a couple tactics we can follow. Oh, wait. Mention too, the QQQ. So the QQQ is kind of something that's struggling right now, if you will. So this would be nice to see the QQQ pick up. So right now we have the SPY positive and the Q's negative, right? That does not set the stage for an easy trending market, right? So you can already see we're getting opposing arguments from two major ETFs, if you will, right? Obviously, if you go look back a couple days ago, right, you can see QQQ over 50 SMA, over 50 SMA, back test long, right? That matches the patterning of the SPY. So markets rally, markets rip, easy going, whatever. Now we come in this morning and we have the SPY is positive, but the Q's is currently negative. That does not set the stage, not necessarily, but, one would look at that and go, well, probably not the most bullish market right now, right? Like, duh. Because if it was, then the Qs would not be on negative side. They'd be on the positive side. And or they would be trending close to equal highs / patterning of the SPY. That's a lot of lingo in there. All you got to know is the markets are not both moving together in a way where we would just be like, oh, bullish market. No, we'd look at it and go, could be better, but it's not, right? Like, could be better. Grass is definitely greener on the other side in this scenario, which is both of the markets moving in confluence with the breakout, with the buy move, but they're not. So that tells us some of the tech side is lagging right now. And that's a big player of markets moving positively and easy and whatever. So, which basically all just comes down to what we talked about yesterday, which is when the market, let's go to SPX real quick. When the market, I don't have the 10 SMA on. I'm going to add a simple moving average real quick for the purpose of this little spiel. Oh, it's really dark. It's a dark purple. You can't see it. 1 second. Let me change it. Oh, wait, hold on. Yeah, it should be 10. Style blue. Give it the blue. Give me the blue. Alrighty, so this is what we talked about yesterday. This is a pretty good rule. I say this does a really, it's not perfect, just like everything, but I would say it works like 80% of the time for me at least, which is when you have the 10 SMA below the 50 SMA, that happened there, and then just a day and a half later, you get a cross above here. So we would call that 2 back to back, so we'll call that BTB, back to back crosses. All right, cross. So that's 2 back to back crosses opposing, right? So one was down, one was up in a very short period of time. When that happens, a lot of times it's a relatively early indication, or can be, that markets are choppy if you haven't already figured it out, right? So sometimes it can be a little lagging to a choppy environment, meaning there's kind of some chop prior to, because again, for a market to create a cross down and a cross up, essentially the market has to go down and up, right? Which already starts to fall into a choppy environment, right? But it can also be an indication that the future to come may not be so trending, or it's going to take a little bit of time for markets to digest and figure themselves out for a sec. So that's where we're kind of at, is we've had a pretty solid bullish move over this past couple weeks, which then turned into kind of like a sideways flag, and it tried to break up and didn't really do much, and now it's kind of like we're doing this sideways action. We kind of have been for a couple weeks now, realistically. But it was only from like the past day or so, or a couple days, where the market actually went below the 50 SMA there, and then had a back test and try to move away, So this is all what I would say was all bullish, and it was only till right there the market truly kind of gave us an indication it might want to change structure a bit. And we've been kind of battling with that with FOMC these past couple days. So regardless, when you have two back-to-back false crosses like you just got, is what I call it, you can kind of get an idea markets may not be so easy trend mode right now. So that being said, that's that. However you want to deal with that, be my guest. There's many ways to skin a cat and skin the market, if you will. So that's kind of falls into the market we've been having. Now, there's a couple things we can do, which always pretty much. Oh, lastly, I gotta mention this. I forgot. Whenever we start to get a consolidation market, whenever I see back-to-back false crosses, I pretty much start taking the high and the low of the lows and the highs from after the crossing, the false signals and crosses. So if we take a look at from like here to here, and that's not totally true. I mean, it is and it isn't, but we would essentially just look at this high, we'd look at these lows, and the reason being is you see we have the false crossing in here. When that starts to happen, it tells me it's sort of an indecisive market. So every high and low that's established within that consolidation becomes the break point before a trending market happens. So now we would basically just run a high-low scenario and go everything in between the high and low as just a consolidation market. And our next good trending breaking out moves, in theory, are going to come from below that and above here. So that's the way we now read that. And everything in between here is just going to be like that. So when does that change? I don't know. But that's kind of a simple tactic I use when I start to see those signaling, and it does fairly well. It's nothing complicated, but it does a pretty decent job. So that's where my brain's at right now, is that we're kind of in a meh market, and we just gotta wait for the market to do what it do and get us out of it and go back to trending moves, and whenever that is whenever that is. All right, we got about 4 minutes till the market opens. So what we're gonna do, like I said, is got a couple things that we can pay attention to. So we know, so obviously the market's over the 50 SMA, so we would want to be leaned more long bias in general. That's why I have some UPRO on, because obviously the market's positive. So we would then look at, we can look at some volume weighted average price stuff. So we'll take this, we'll overlap the 50 SMA. We will then go into today's trading session, or well, from yesterday, go down to a 1 minute. We'll start here. We start low on a 1 minute and see how this is performed. So this is one thing we can do, which the reason I'm talking about is because I see it as a valid scenario, which is this is the 50 SMA, so right about there. So we know that the market above here is positive. There's your positive move. Obviously below here is negative, short-lived breakdown, back to positive, market up. Remember, it's always easier to get a market to go up than it is to go down, especially when you consider that things inflate, prices inflate. So just naturally, things just tend to become higher priced as opposed to lower priced. So if you're a bear, it's always going to be harder to get trending moves than it is to be a bull. So either way, we'll take VWAP, anchor 2, lows here, setting, low, doink, and arguably this one here because it's kind of the higher low that established above. So we would read this as, since yesterday, the market eventually bounced and got above the 50 SMA and whatever, it started trending out. These VWAPs would essentially be that volume weighted average price trend of the algorithms or the market that established itself above the 50 SMA. You can see here later in the day, pretty much just holds that VWAP trend up. So this is us supporting the market from the buy signal. So then in the after hour session, we rolled down to here again. All right. And we've been kind of, despite this little algo, whatever the hell that scummy candle is, trying to hold that VWAP trend. All right, we're sitting right in the VWAP trend on the 1 minute. Sorry, ding ding ding. All right, and then eventually moving up off the VWAP trend, rolling back down too. So, there really won't be any significant like pull unless we were to take out the VWAP trend, because that's where we're holding the markets since yesterday, right? So we started along over the 50 SMA, market go uppeth, we track the VWAP of that market structure change, and we support that trend all day long, all night long, kind of sketchy, into to this morning, into the stream that Connor's talking to you now, and we're right here. There's only two options a market can do: go up and go down. So if market's not going to go down, then obviously uppeth. If market go downeth, then gotta break downeth, right? So that being said, we are on the long side. We're not really looking for markets to necessarily... It's not that we're not looking for markets to break down. It's we don't really care what happens. It's all about what the market wants, right? So when the market opens, what are we going to do? We're going to look at the market internals. How are things moving in the immediate? Then we'll start reading volatility. If they suggest that the market should go down, the market will go down. If it suggests that the market shouldn't go down, then the market won't go down. And we'll read that in real time with you here. And so market's going to open. Before that happens, I'm going to run and get a coffee. I'll catch you guys in a second. And yes, I'm about to mute this mic, so if I come back and my thing's moving and I'm not saying anything, hear it, say something in the chat. Okay, we're back here. We are back. Oh my goodness, the market is supporting the 1 minute volume weighted average VWAP trend. There's so many different like little strategies and different things that I can talk about and we can look for. But right now, my brain is pretty much on the... If we're over the 50 SMA, we are always looking to drive the price of the market upwards, right? While at the same time seeking out any sort of desirable pullback target to further a higher low, right? So if the market's positive, you're always looking for movement up and simultaneously counter pullback targets down, right? And that's how the brain works. It's not, oh, the market's positive, it's going to go straight up. No, we hope it does that. It rarely does that and occasionally does that. It normally goes up, pulls back, goes up, pulls back, goes up, pulls back. And goes up, pulls back, fails to go up, breaks down, changes direction sometimes. Because things don't go up for forever, right? Do you ever trade futures? Occasionally. I've traded pretty much everything in my life. My business partner, Brandon's a very, very good futures trader. I've had my moments trading futures. It's never been something that I've become amazing at. I mean, yes, I can make money here and there, but it's like to consistently do it for forever, over and over and over. My brain is just no longer great at that. You know what I mean? So normally what I end up, not normally, but just in general, I swing trade a lot of 3x leverage ETF of the market. But yeah, I could and can trade futures. I just don't trade them every single day over and over and over all day long. Sometimes I'll trade some penny stocks, ETF, SPY, stuff like that. I don't find myself doing a whole lot of options anymore these days. Occasionally I might do something. I've been wanting to do a bigger options trade, leap trade on some Bitcoin stuff, but I've been waiting years for that trade. Still hasn't come to. So there might be a day where I load up on some long-term leap options for like MSTR or some of the Bitcoin ETFs, but that setup that I'm looking for, it takes years to come, and I'm not even sure if the same setup's going to repeat this time around, but if it does, then hopefully, it works. But I've been waiting on that one. That's a play I've been thinking about for probably 3.5 years now. So just sitting and waiting, and I could be about a year out from that trade. So that would be cool. And Toadster. Yeah, a lot of what I do here on this stream is a lot of market education, market forecasting. Hell, half the time we do a lot of foresight analysis, basically telling you what's going to happen before it happens, because we've just seen the market, just watched it so many days every single day for 10 years that there's only so many scenarios that are going to happen, right? And a lot of what I'll do on this stream is I'll trade some penny stocks. I'll do a lot of 3x leverage UPRO, and I'm trading a smaller Roth IRA account. Trying to actually grow a Roth IRA account tax-free. I haven't been able to trade a Roth IRA for most of my career, if you will, but finally able to. Yeah, so really where your brain should be at right now, guys, is looking for longs and higher low development on the market. And in the back of your mind, like the counter of that, which is if you're wrong, what would make you be wrong? So like right now there should be like no fear, right? You really shouldn't be fearful of the market, number one, because if I show you guys the volatility index, right, this is all to basically teach you not to be scared, right? Like, why would you be scared right now? The VIX is at 15 and it's not breaking out. So why are you scared? You shouldn't be. You should just be optimistic, if you will. Also, look at the VVIX. VVIX is not breaking out. It's not going up. Now, these things can always change, but it's not like they're going to change in a split second. Sometimes they do, but it's very rare. And when they do, it's usually because of like some random like FOMC, not random FOMC, but like FOMC. I always get so far off topic. It's because there's so much to it. But, when you just think about it simply, why would you be scared of the market right now? What's the point? There is no point. There's nobody hedging for tailwind risk in the market. Nobody's hedging downside volatility right now in a way that would just scream at your face like, could someone be hedging volatility that I don't see? Sure. Yes. That's totally possible. But for the things that I pay attention to and watch that seem to do very well, there is nothing just screaming blatantly in our face right now that we're idiots and that we should be scared of the market, meaning go down. No, the market is not saying that to us right now. The market is saying the opposite. The market is saying that there's nothing to be worried about. Okay? VVIX, nobody's hedging downside risk right now. And no one is expressing any fear into the market. Look at Where's the fear? There is none. So in order for that to change, right, what's gonna, like, that's what I mean is we can't use the VIX right now and go, oh, the VIX is saying short the market. It's not. We can't look at the VVIX and go, VVIX is telling us to short the market. It's not. And the S&P 500 is not bearish below the 50 SMA, so it's not telling us to short the market. So if we want to be bears, we would need generally those three things, or we would then go to the market internals, and we'd say, well, is the market in the immediate telling us to be bearish? Well, look at here. Look at the NASDAQ. Or look at all the tech stocks, or if you will, like combined major market cap stocks. They're all just going up. So is the market going to go down? Probably not. All right. Then we look at the SPY issues here. Now, the SPY issues aren't really doing that great. Look at, they're up and flat, right? But you guys know, it doesn't matter necessarily what the SPY issues do. It matters what those major market cap stocks do. Those are going up. Market's probably not going down. Right? So what are we seeing? We're actually seeing a day where the SPY issues and the advancing declining issues of the S&P 500 and the New York Stock Exchange aren't really doing that great. But it's the forward movement that we're getting across Apple, Microsoft, Nvidia, Meta, all these other players that is keeping our market up. Now, remember earlier we said it would be nice if the NASDAQ started to pick up. Remember we said this is not the greatest long market. If it was, then we'd have the NASDAQ and the SPY both moving in confluence and yada, yada, yada. Where the hell is this thing? Okay, like that's cool. We'll just not show you the what? Like, hello? All right, TradingView. I was on a roll there. I know what I was preaching was just too good, and that's why you had to just shut us down, eh? All right. So we're going to the old NASDAQ. So remember we said it would be nice to see the NASDAQ get back to positive, and that could help the market, but it's not. And so far what we've seen, right? Look at, you see how these issues are going up on the, well, just you guys know, these are the combined tickers. So these are the combined tickers. This is, you know, you can see them in the upper left. They're always right here. Apple, Microsoft, Amazon, Meta, Google, Nvidia, Netflix, Tesla. I could make that bigger if I wanted to. I just use those and it does a pretty good job. All right. So those are going up. Now look at the NASDAQ. What's the NASDAQ doing, right? The NASDAQ is what? The NASDAQ is going up, right? So you can see that NASDAQ's going up. But look at, where's the 50 SMA? The 50 SMA is here, the red line. Right, or the yellow, right? So we know the NASDAQ, even though it's bouncing and it's been going up, it's not positive. So this is still just arguably a back test and down, right? Until it's above. So that's the tricky thing in the market is all we're seeing right now on the NASDAQ is simply a bounce that's in a negative market. Why? Because, excuse me, it's below that 50 SMA. Right? So look at, this is the 50 SMA right here. So this is below. Market gaps down this morning below. It gets bought up all morning, but it's still not above where we would consider the NASDAQ to be market structure positive. Okay? So the algorithms in real time read that the market on the NASDAQ is in fact not positive. So if at any point, which we're seeing right now, the NASDAQ could get weakness below the 50 SMA, what's going to happen? Your SPY is going to top out and your markets are going to go down. You know what I mean? So, yeah, I know it's a lot to take in, but these are all the things that I can read and read in real time. And once you just do it over and over and over, it really is just like reading a picture book every day. It's the same thing over and over. It never changes. You know, fair value gaps may be, and I'm not saying those aren't good or whatnot. I'm just saying, you know, like a fair value gap may come into play somewhere, but it, you know, the volatility, the market internals, how we actually move the markets, That all happens a lot based off volatility, market internals, things like that. And then along the way, a fair value gap will be created, or an impulsive move will be created, which then allows for a Fibonacci. Your main strategy is based off the Anchor VWAP, which I learned from you, so thank you. Awesome. That's another thing that I do really well. I have a very analytical brain at the end of the day, and I think that as I get older, that's why I've actually kind of struggled with some of the shorter term trading, if you will, a little bit. Is I just think my brain is just a very analytical brain. So like this, I can read all this stuff fantastic, but then the emotional side of it still can trick me up at times, especially when it comes down to some of the shorter term stuff, if you will, because it's almost like my brain knows too much, if you will. So that's why I think over the years I've been able to learn and develop and teach and find a lot of different strategies that work very well in many different market environments. But then, my brain in real time is like thinks of every scenario, if you will. So maybe that's why, So it's a gift and a curse at the same time. But either way, into the market, like I said, it's almost like I wish I could just rattle you guys and just have you learn everything real quick, which maybe that would be dangerous. But yeah, I don't even need to look. Why is the market going down right now? NASDAQ's going down, right? Market internals, they're going down. Okay, so I wouldn't look at, so this whole move here, this pullback, I wouldn't, right? It's not, look, it's not the volatility index, right? We're not looking at the volatility. This move down you're seeing in the market, it's not the volatility index, right? Yeah, maybe that's going up a little, but it's not this, right? This isn't breaking out fear, right? This little move down in the market, this is not the VVIX. This is not hedging of volatility. That's down, right? It's not that, right? And every single one of my charts disappeared because that's what my computer loves to do. Where did it go? This, I think. Yep. Okay, cool. Now there's one more. It's that little ticker symbol. There you go. Right. What we're seeing right now is simply the Magnificent Seven pulling back, right? So, you know what I mean? Like, that's what we're seeing. Look at these candles pulling back here, right? So this is Apple, Microsoft, Amazon, Meta, right? So obviously, if we go look at Nvidia, look at Nvidia's going down. Look at this pattern. Look at the pattern of Nvidia, and then look at the pattern of our Magnificent Seven ticker. Right? It looks like an A or like an upside down V, right? And you go look at Nvidia, upside down V, right? Go look at Microsoft, kind of a V down, right? Google, down, right? Apple, up. Tesla, up, right? Amazon, down, right? Netflix, up. Meta, down, upside down V. AMD, upside down V. Right. So why did the market stop going up there? Because everything that's driving the market higher stopped going up and started going down, right? So you can generally know why the market's doing everything it's doing in real time because it's usually a handful of stocks that do it, right? And I feel silly because I feel like I say this every single day, but it's just like duh, So like was it because the market had a fair value gap that all these stocks went down? Maybe. Was it because of a Fibonacci? Maybe. Was it because that's just how the market was moving? Maybe. There's so many different ways to think about it, but one thing's for certain, the reality is the market stopped going up just right there. Why? Because everything that's driving the market higher stopped going up and started going down. So, even with these pullbacks or what have you, again, I wouldn't even be. That still doesn't even really concern me at the end of the day. I mean, yeah, we're pulling back, but what else do you expect? Your major market cap stocks aren't going up. You got a negative MACD, so pretty much for the market to stop going down, these are going to have to stop going down. So until that happens, everyone just expect that's literally it. Oh no, when's market going to stop going down? When the market finds a support, when these major market cap stocks stop. So someone's going to go, oh, well, where's the support? Well, we already told you one, which was what? It was the 1 minute volume weighted average price, which we used all day into today. When that starts to break down, that's when we'll start to see a little slide. What happened? We broke below that. There's your slide, right? So now what? We could look to a 5 minute. 5 minutes broken down. We could look to a 10 minute. Well, I don't use a 10 minute, but obviously, so it'd really be go to like a 30 minute. 30 minute would be our next volume weighted average price support zone, which we're kind of coming into right now. So this would now be kind of one of the next main levels that I would look at would be this guy right here. So this would be our 30-minute volume weighted average price VWAP support zone, just like that. So that's another level I would look for counter trend support. So we've traded into it. There's a wick. So this is our 30-minute VWAP level and or breakdown. All right. So what do we remember? We said the market's positive. So what do we always want? We want to see it go up for as long as possible, and also think about where it will pull back to. What are the counter trend pullback levels, right? So we know that one would be the 1 minute, one would be the 5 minute, another one would be the 30 minute. We just pulled down into the 30 minute. So these are all expected pullback levels when and if bullish movement does not continue, right? And the process repeats every single time. Right? Market is positive. It goes up for as long as it can. And if it starts to pull back, like the Magnificent Seven stocks are not performing well, so things aren't going to go up. They're going to go down. Where are they going to go down to? We're going to pull them back to 1 minute, 5 minutes, 30 minutes, etc. Could be VWAPs. Could be Fibonacci. Right? Could be SMAs. You know what I mean? So when a long move starts, every indicator, support level, or strategy that you use to define support would then be below the price action. So then as it starts to pull back, you go into your bag of tricks, which would be 5 minute VWAP, 1 minute VWAP, 30 minute VWAP, 30 minute 50 SMA, Fibonacci this, Fibonacci that, fair value gap this, fair value gap that. Whatever is below price action that you could use as support, you would then start focusing on. And that's all we're doing, right? So it's not like we're doing anything mystical. It's just we're simply just looking at what could be used as a sell targets down for a pullback, which it's doing, and potential supports, and that's it. And if nothing gets supported, that's fine. Things don't go up for forever, right? And right now, actually, this is kind of interesting. I was going to say, we're starting to bounce some of the Magnificent Seven, but we have not yet bounced the SPY, which is kind of interesting. Which tells me either a bounce is coming, or this is a fake bottom. But I would say a bounce is coming. There you go. There's your green candles. And again, so like look at ready. So let's just bring this up a little bit bigger. Let's go full screen on this one. And when I say bounce, it's tradable bounce, right? Does this establish a 30-minute low for sure? Again, I don't know. But look at that. Ready? So think about this. So as the market sells down into our 30-minute VWAP pullback, when I say it's a pullback target, did I wake up this morning and go, hey guys, we're going to pull the market back to this price? No. But it is a pullback target because we use it every single time within a bullish move at some point. So it's always a pullback target. It's always a part of the strategy. It's never not. So yes, we just hit the 30-minute pullback structure target of this buy move, whatever you want to call it, right? So what happens as we pull the market down into this expected 30-minute VWAP destination that could be also used as a temporary bottom, bigger bottom, support, whatever, right? You notice over here, look at all the green buying going on the Magnificent Seven. At the same time, you come into one of your supports, potential supports, maybe supports, right? You see green. Well, what did we just tell you? Markets will not go down. Well, it's not true, but right, like markets are going down because major market cap stocks are going down. If major market cap stocks go up, then the market probably go uppeth, right? And so that's what you're seeing in real time, how we've literally come into something we desire as a potential support area, whether it be bigger or just a short-term tradable support area. And then you match that up with pretty much what drives the price action of the market, almost, what are they, tit for tack or tack for tick or tic tacs, right? Something like that. Oh, and then look at market goes up. You know, I did not look for a fair value gap. We were not looking at somebody else's YouTube stream. We did not read the news. We don't even think about the news. You know what I mean? Like, we didn't use any of that. Just simply pick a couple things we think look decent, follow what moves the market. Oh, bounce. Okay, cool. There was no, I mean, we didn't look for, a candlestick pattern, So, there's that. All right. So, yay. Now, remember, what did we say? What were we just saying? We were saying something that, like, don't be fearful of the market. There's no point to being fearful of the market. Why would you be scared? Right? Now, granted, the market did go down, but why would you be scared? It's not like the market is screaming at your face that this is just going to be a sell-off that destroys planet Earth. Again, there's nobody hedging downside risk right now. Right? There's no hedging of downside volatility. There's no fear in the market. So that means there's literally no one that expects this market just to tank and sell off today. Could it happen? Sure. The only way that can happen is if every single major market cap stock, like Apple, Facebook, all of those or whatever, those just have to fall off planet Earth today, along with every other equity in the market, which right now the S&P is selling off. Right now, the New York Stock Exchange, that's all selling off. These are falling off the face of the earth to a degree. Not really, but they are falling off. But look at the Magnificent Seven aren't real. I mean, they did. But you see what I'm saying? Since there's no fear being expressed in the market and there's no hedging of downside volatility, the only way we can really get the markets to get spooked or to go down is we just need so much collective broad selling off today that it would cause the market to do that. Now, it can happen, right? But that's what you're going to have, right, for that to actually take place. Because no one is hedging downside volatility. No one is expressing true fear into the market. So the only way to really get the markets to move outside of the markets being fearful, hedging of volatility, or the market's just being in a bearish trend, is you need the equities in the market to just catastrophically sell off to destroy the long bias movement. Right? So, like I said, I'm not really fearful. I don't like this pullback, whatever, sure. Okay, we pulled back, cool. This pullback is not enough for me to think, oh, the market's going to just die, right? Now, it could happen, but again, there's not enough movement there. Or there's not enough, there's no fear, right? There's literally no fear. Should get that tattooed on my finger. No fear. So this is still theoretically a buy the dip scenario until it's not. And right now, the only thing that's preventing the market from going down is the Magnificent Seven. So basically, the market it's weak in the sense that it's only got one thing in the market going for it today. That's these magnificent seven. If those start to underperform and go down, yeah, this market can keep sliding down. You know what I mean? But that's what we have to see. Look at the SPY issues here, still falling down. You know, look at the, you know what I mean? So SPY issues down, NYSE issues down. Only thing holding the markets right now are magnificent seven players, pretty much, right? And that arguably may not be enough. Okay. Oh, there was something else I was gonna say. Well, I mean, it's just still a repeat, right? It's just still a repeat. Like what, you know, like we talked about this morning, right? Are we extremely long biased the market? No. Are we extremely bearish the market? No. Why? Because the market has given us back-to-back false crosses. When that happens, what do we assume? The market's going to be a little bit more tricky. It's not going to be as easy flowing trending. It could be more of a choppy environment until we break previous price action structure. So what do we assume here on this stream with all of you guys until stated otherwise? Let me go into a 30-minute here. Oh, excuse me. That all of this price action that we're seeing from essentially here to here is that everything inside of here is just chop. This is our chop environment until we're above or below. Right? So we don't expect anything crazy from the market for right now. When I say crazy, I mean we're not looking for long moves like that, right? That long move, something like that, or a breakdown can't happen unless it's above or below here. That's it. So our bias and psychology hopefully will be in line for the next, you know, foreseeable days, weeks until we get out of the structure, right? And that's okay, right? We're not complaining. We're not like, oh, market sucks, you know, oh, just another day of nothing, which we kind of do at times, but it's to be expected, right? This is totally normal. This is what we tend to get when we don't have trending markets. Two back-to-back false crosses. Right? You know, I'm saying like right here, this is, you know, arguably this is our 30-minute SPX, 50 SMA, previous 30-minute bottom volume weighted average price zone. Like, so if you think of structures and higher lows, right, we would assume like, pull back here. Hopefully you'd support and keep going up. If not, that's not a good thing, right? And this is what you'd expect in a kind of a back and forth market. Okay, 30-minute BWAP downs. Yeah, let me double check something real quick. 30 minutes, so we got the 50 SMAs now there. Let's go to SPY. Regular trading. Settings low or high. That's funny, they're not even. I haven't letting that retrace. And like, for example, you know, if the market, I don't want to say that. Well, I will. If the market continues to remain in this kind of back and forth chop environment, you know, that makes it
that makes the 50 SMA even more of like a desirable back test level, right? Like, for example, let's go from here to here, right? So watch this, ready? Hits the 50 SMA, goes up, comes down, hits the 50 SMA, goes down, pops up, hits the 50 SMA, goes down, pops up, hits 50, goes up, comes down, hits 50, goes down, comes up, hits 50. The 50 SMA becomes a desirable price point for the markets to go to when you're in a chop consolidation. So if the market wants to, I mean, yeah, it can go all the way back down there if it wants. You know, it would be totally normal, right? So think about it. Everyone getting long, myself included, for the past day. If we don't keep trending out and we don't hold any higher lows and the market needs to reset, it's going there, right? It's obvious. So, like, that's another thing, right? People have to be understanding of why and what and how and where and what we want to do with the markets, right? You know? Which is, if we don't establish higher lows from the most recent 50 SMA long and it needs to reestablish, it will then trade back to 684.84, right? See, now look at, ready? See, this pulling back on the market has been enough so that we started to create a green candle on VVIX. All right? It's enough that we started to create like a little green candle here on the VIX. Granted, we don't really care too much, but you can see now, like, see, there's actually some, like, a little, people are like, oh, that's interesting, right? Like, oh, the market's going down. Okay, like, maybe, so, like, you can see people's gears are starting to change or maybe starting to think, right? But granted, we're so far from a legitimate breakout of fear and stuff. It's still not really a big concern, right? We're still not concerned with the volatility index. We're still not concerned with the hedging of volatility. We're mainly just concerned with the current ongoing development of market internals. Do these keep advancing in the negative direction so much so that we end up selling this market off down to, say, like the 50 SMA? At which point, fear will really start to be expressed into the pricing of the market. And at that point, we might start to be a little bit more concerned with the market. Everything that's happening right now is simply markets pulling back within a positive long territory. All right. Now, I don't think the long territory is great, as we've already explained many times. The market's in a confusing time. We've had back-to-back false signals, right? When that's the case, we don't have an easy trending market. So everything that's taking place is exactly what we would expect can take place on a day or a week like this week, or a day like today, right? The market is not confusing. We literally are in kind of a choppy environment as defined by what we've already discussed, back-to-back false crosses. The market isn't really expressing true fear. That's why the market isn't just catastrophically getting destroyed, right? There's no reason for it to. We're simply pulling the stock market back because of market internals decreasing on the day. It's simply a pullback in price action within a positive environment. And we'll see if that changes over the next couple days.
But, you know, like, for example, there's probably somebody out there buying, you know, someone could have easily bought a bunch of calls today, right? So think about someone coming out, especially a newer trader or whatnot, newer investor comes out, buys a bunch of calls long bias on the market today, right? He's getting just roasted, getting absolutely cooked. And he has no clue that we're simply moving the markets down via selling pressure on all of the advancing declining issues, right? And arguably, if he was hanging out in the stream, he would know that, hey guys, there's not a whole lot moving long bias right now, right? So why would we be extremely long bias the market? We're not, right? Oh, there's literally nothing going up in the market. Why am I buying a bunch of calls? Doesn't make sense, right? Right? Oh, we're supposed to be in sort of a choppy environment and we won't have a trending long breakdown or long breakout or breakdown until we're above or below the most recent week's market structure. Oh, okay. So maybe I won't just load up a bunch of calls, right? So something like that could have very well helped a newer investor into the market this stream in that regard. But everyone's on their own path, and so that's just it's something I see in real time. It's like, oh, like I know for a fact someone just bought a bunch of calls today and just got absolutely cooked, and could have simply figured that one out, by watching these market internals, like that. Granted, it took me friggin' 12 years before I was able to read the markets like this. And even being able to read the markets like this, I still can't trade them in a way that makes me a millionaire, which is another kind of crazy thing. Hence, the market it's a very interesting thing psychologically. So market's going down, as we discussed. This thing has the potential to go down to the 50 SMA if the markets so choose and if the markets want, right? If the algorithms and the people that control the market want this to trade down to 684.84, it's going to trade at 684.84. And the fact that I spoke about it on the stream makes it all the more likely because I don't know, but I have an itch that a lot of market makers watch my stuff. Well, maybe not, who knows, but it sure does seem when the boy opens his mouth, the things do happen. But also, do you kind of notice where we kind of, you want to, like another thing, you see where we kind of cliff dived the market? See how we cliff dived right about there? To me, that means, when I look at the long move, right? So think about the long that started over the 50 SMA and up, right? This pullback here to this VWAP should have been the 30-minute higher low development. And since there wasn't one, it becomes the shelf dive point for the failure of a 30-minute higher low structure. So that's what I read that as. I read that as a level at which we would many times create a higher low. And if you don't create a higher low, then you're what? You're going down, right? So that's the thing, is you can get an idea of where and how to build the stair-step pattern of the stock market. But the one thing about that is if you fail to hold the higher low, it becomes the breakdown point, or it becomes in this case, a VWAP breakdown point, right? If we look at the 1 minute chart, this would be right here. This would be your 30-minute VWAP level right there. So you can see market trades down into, bounce up, then come down, break, right? So, yeah, that's that. Now, market's still over the 50. Let's see where the QQQ is. See, like I was saying before, is the problem with our market right now is we have two markets that are not moving in confluence with one another. You have the NASDAQ, which is currently negative, right? So the NASDAQ is currently negative. This thing's got a high-low system from here to here. This is the current high-low channel that we're focused on. Right, so the breakdown and breakout for the QQQ market is going to happen above or below here. And the trend change system is the yellow line in the middle. All right, so I mean, yeah, that's one thing we're following right now is QQQ is not really helping the party. I would imagine the Russell 2000 is negative just with the way the penny stock stuff, but we'll see. Actually, no, Russell 2000's up. My scanner didn't pick anything up from TOS, so that's why I kind of thought we might be negative. But no, this is actually doing pretty decent. No DJX. Let's see. Yeah, another thing too is, we do have if the SPY sells off down to that 50 SMA target, you have the opportunity for a bounce trade down there. Why? Because that's just the rules. Anytime you trade into the 50, you assume that algorithms will first try to read if they want to hold, and if they don't, then they break down. So yeah, the 50 SMA is a potential tradable spot. So we have what we call the first tag metric long trade scenario, where the market, well, more like where TradingView starts working. Yeah, so you have your first tag metric down here, long opportunity if we trade into it, right? You also have the failed first tag long to false breakdown, recovery backtest long opportunity. So if you don't just come down into and bounce off of, then you naturally will come down to, break below, then do a back test long here. So those are your two long scenarios that arguably would be coming up. And when I say that, it's, I mean, like I said before, it's kind of a choppy market. But if we're going to prevent the market from going into a bigger sell-off, then that's what has to happen, right? We have to support the market here. We have to prevent a real breakdown, right? And note, that's the danger, right? Is that the same level you use to keep the market positive is the same level you use to turn a market negative. So it's the be all end all start point. Always is. It has nothing to do with reversals, has nothing to do with, timing bottoms. It's just where the trend stays positive or where the trend flips negative. So if we want to keep it positive, we got to basically do that. If we want it negative, we do that, right? And the market will decide, we don't necessarily control that. But yeah. What time is it? 10:14? Wow, it's 10:14. I felt like we solved the entire world's problems today already. Oh boy. All right, so obviously with the market pulling down some more, we obviously have seen the market go up a bit, etc., etc. Or sorry, VVIX go up a little bit. My apologies, I said that really weird.
Yeah, so far I'm just kind of scrolling around some of these penny stocks right now. It doesn't really look like anything crazy happened today. Didn't really pay attention too much. Yeah, right now we're just seeing pretty basic stuff in terms of you just have your previous lower high, take VWAP off that, roll it down, and that's why you know where the market's going here. All right. Take that VWAP, we can just move that up to kind of like right about there. And that tells us that the next breakout long area would probably be, like, when I say breakout, like counter trend pop would be somewhere up to like there. But either way, so this is how it works. So right now we're currently on this VWAP. So we are currently on the 1 minute rolling resistance continuation. Hence your pop to here to yellow, then down again. So now we just basically do the same thing. We'll just take a VWAP, go to this previous high, or this like right there, and we'll just do another one here. And that's that. That's our next 1 minute rolling resistance. Oh my goodness, the market going down again. No. We know likey. We know likey. So yeah, I was gonna say that something. I was gonna say something. Which is yeah, we still have not expressed fear into the market. We've just simply pulled it back. So even this whole sell-off, not enough to take the VIX to a breakout yet, or to break out VVIX. Just an FYI. Today. All right, so we should obviously get the 50 SMA here if we haven't already. All right, so there goes the market back down to the 50 SMA. Oh my gosh, who would have thought? Oh, it's so much fun. The market's a blast when you can just sit here, giggle, and tell people where things are probably going to go before they go there. Man, like if only if on CNBC they would tell us that the market was probably going to trade down to the 50 SMA. And when I say probably, like I said, we didn't wake up today going, oh, it's going to trade to the 50 SMA. I mean, it kind of took a second. It's like, well, we already know it can do that. It just, the market has to develop in a way that would allow it to do it. And sure enough, it did. So ready, here's where arguably the 1 minute, or not the 1 minute, but this is where algorithms may or may not hold a bounce. Honestly, I'm probably going to lean with they're not going to hold a bounce because that would be too obvious. So I think they're going to do a breakdown. And then we're going to do a counter long back test. I think they'll break it down first. I don't think they're going to hold support here. Granted, I'm not even looking at, I'm not looking at MACD. I'm not looking like any momentum thing. We'll just see. It's just got that vibe. It's got the vibe that they're going to pull a scummy little shifty Magoo to the downside. Now, here's the funny thing, is that with this entire drop, even though it's a big sell-off, we still haven't broken out volatility. Literally, this whole entire drop, we still haven't broken out volatility. We're still not expressing real fear into the market. And the reason I think, and the reason I say that too, is that, you know, most people would look at this drop and go, oh my gosh, what happened in the market? And I would just read it as simply a pullback to the 50 SMA. Like, this is totally normal, right? Especially within the market circumstances we're in, which is what? A choppy environment. And when I say choppy environment, I mean we're not in a trending environment. Remember, we said this yesterday and today. Do not be over long biased. Do not be overly bearish, etc. We're in a back and forth market. And when I say don't be overly long biased or bearish, it's in the sense of like a trending market. We're not in a trending market, right? So you should expect price action to fall back within itself in the previous day's ranges, more likely. Okay? And that's exactly what we're getting, right? So if you think that we're in more of a choppy market, then yeah, it would make sense that the market isn't extremely fearful of this pullback we're seeing today, because if we're not in a trending environment, then this whole bearish move isn't going to become a trending breakdown, right? So that's why the market isn't expressing extreme fear yet, because we know that we're not in a trending environment. So this whole sell-off theoretically isn't a trending bearish breakdown of the equities markets. Hence why we haven't seen the VIX truly express fear, or we haven't seen the VVIX go back on to tailwind risk, right? Think about it, right? If you knew yourself that this whole sell-off wasn't going to break down in the market, and you were the computers and you were the algorithms, would you break out the VIX? Would you be fearful? You wouldn't. But if you were like, this is going to turn into a mega breakdown, a mega trending bearish move, then yeah, we would probably see the VIX breaking out or VVIX breaking out. They haven't done that yet. So the smartest players in the game don't yet see this sell-off as a catastrophic breakdown. It could become one, but it's not yet seen as that, right? So we're still in this progression phase. Granted, it's going down. Don't get me wrong. It's going down, right? As we've already said, the market will not go up if the what? If the mega cap stocks are going down. They're going down. SPY going down, NYC going down, these going down. And you know, like 40 minutes ago we told you, the only thing holding up today's market are your major market cap stocks. If those give way, the entire market's going down, right? So here we are. Entire market's down. Look we did not hold support at the 50 SMA. How did I know that was going to happen? Because I watched this too many times, right? It's just like, you could just tell, right? This is just one of those scenarios where they're not going to hold it. We're in a choppy back and forth environment. If that's the case, why would we hold support on the 50 SMA to keep it a trending bullish market? We wouldn't. All right. All right, we've now broken, look at, see how we broke down this yellow line? That means the market is now on the SPY flipped to bearish, or sorry, to like neutral territory, if you will. Look at the VVIX. Look at, we've now brought the VVIX to dang it, Thinkorswim's freezing. Come on. See, look at now. See how the VVIX is now priced at the 50 SMA? Because now the market is below the 50 SMA. The market is arguably sending a warning shot. Now the VVIX, the hedging of volatility, is starting to wake up. They're starting to go, okay, we've now pulled the market back. We've now pulled it down below the 50 SMA. We haven't held support. Now should I start be getting nervous? You see what I'm saying? See, now that we've sold the market off so much today, it's starting to, people are starting to maybe get fearful. They're like, holy shit, this is becoming crazy. Maybe, right? So now the VVIX is back to its over-under. Now it's going to say, do I want to stay bearish or do I want to go bullish, right? So now we're getting to the point where it makes more sense to put some focus on the VVIX, okay? If the VVIX starts to break out, we'll be more likely to see the VIX now go up to the 30-minute, right? See, now that the SPY is below its 50 SMA, that tells us that we're no longer long bias the market. We are now neutral to bearish in the sense of SMAs. Now, you guys know we've already been bearish the market today in the sense that we knew that the market would not go up while all of the equities were selling off. So we were market internal bearish this morning. Now we may be becoming trend bearish potentially, right? So there's different bearishness and bullishness. This morning we were bearish equity selling off. Now we're getting the SMA calculation that could flip markets bearish on SMA trend, right? So yeah, but still, this market going below the 50 SMA here. Let's go back to the SPY. Oh my gosh, Thinkorswim. All right, so see how the market's broken down the 50 SMA. So I'll put text here. This means you are no longer long bias. You are neutral to bearish. All right, based off SMA. Now, this break of the 50 SMA is unconfirmed. Why is it unconfirmed? Because the VIX hasn't actually broken out, right? See how the VIX is still below the 50 SMA? All right, so you have the market, right? Market is below 50 SMA. VIX is below. Or wait, yeah. Right? So if this is a true breakdown and the market's going to keep selling off and it's going to be bearish, we would then expect that the VIX should confirm it. Fear should confirm it. Right now, all we've done is an equity pullback, right? A market internal. We have deleveraged on equities in the market. We have reduced the overall pricing of the stock market today. That reduction in price has started to make people a little scared, but this drop hasn't truly confirmed true fear. Right? So this is still just a market pullback and not a true structure change. Because the market has not yet truly expressed fear. If it were, this VIX would still be breaking out. Which basically means this market is still bounceable, in a way. So what did we tell you the market was going to do? It would either come down for a first tag bounce, or it would do what? It would break down and go for a counter back test. How did we know that was going to happen before it happened? Because I've watched it happen too many times to not know. There you go. That's literally, there's only so many scenarios. They only go up and only go down. So right now we're pretty much doing the 50 SMA back test right there. So if we stay below, we keep trending down. What's going to happen? The VIX is going to go, that's annoying. The VIX is going to go up to its 50 SMA, blah, 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 yada, yada, yada. You get the point. Where did my chart go? There it is. Yeah, anyways. Oh my gosh, we just went back and back tested the 50 SMA. How did we know? How could anyone have possibly known that such a thing was going to happen before it schmappened? Because duh. You know, just be a silly person, a silly human being like myself, and watch the market over and over and over and over for, well, at this point, it would be, well, yeah, I spent now 34% of my life doing this as far as work. So 34% of the existence of my life has been, in terms of years, has been spent watching the stock market. So, yeah, every day. So yeah, like I said, you're no longer long bias, you are neutral to bearish. I am still long UPRO. I'm not even gonna close out, even though we flipped the trend down, just because I still foresee us being in a choppy, scummy environment. So I don't read this as a legitimate breakdown. And even if it does go further, what I'm probably gonna do is just average the low, assuming we're just in a chop environment, and then we're gonna get bought back up anyways. So to me, it don't even matter. So like I said, this is, so look at, you can see it in real, this is how algorithms think. Look at, if we go to like SPX here, let's go to the 30-minute, kind of, we'll delete it all. So you see how, remember we said market would trade down 50 SMA, look at, so now it's broken down. So for the market to stay bearish below the 50 SMA, it's got to stay below that point and roll down. So pop up, that would be your back test, right? So the market's broken down, this would be your back test. Yeah, if you look at the SPX has yet to back test its 50 SMA. So if we end up holding this VWAP higher low here off this low, we're going to rally it up to 6,861 and 10 cents. So like that, you can see how if we take a VWAP and we throw it on the low of this move, we're pretty much holding a higher low, right? So bounce, higher low. There. Granted, this is all micro stuff, but yeah. Oh my gosh, how did he know that that was going to happen? Because obviously, algorithms, simple moving averages, that's how computers talk in real time, and other things, but also because I've watched this same system over and over and over for years. Voila. Magic. And actually, I think Bitcoin's supposed to go down. Like, this whole pullback we're seeing right here, I think it's really supposed to go to here. So, there's that. I think whatever this is, whoever's buying that, it's going to get shaken out down to there. But, yeah, what do I know? Nothing. oh, you know what? This text on the screen, no, it says you're no longer long bias or neutral. I mean, it depends on how you consider that. I mean, you're no longer long bias in the sense that the market's over the 50 SMA, but as I just mentioned to you, like, even though I'm still holding mine long because I'm still long bias in the sense that I don't trust that this is a legitimate breakdown, right? If you were taking like the basic terms of how the system works, then yeah, you would have closed and now you'd be re-long over, right? But that's very, very challenging stuff because that's more like SMA computer stuff. Anyways. Oh boy. One thing I gotta say, the retention rate of our stream is significantly high. You guys watch and then you keep watching. It's probably because we do such a bad job, honestly. Like, we just have zero clue what's going on. We never know why or where the market wants to go to and why it would do it. That's probably why you guys probably just stick around for the jokes, you know? Also, I do not use the VIX on TradingView. That I don't know what it is about TradingView. It's never right. I don't know how or where or why they get their data the way they do. I just don't trust it. Oh my gosh. Idiots. Not you guys, no. Just the people at Floor and Decor. I bought some floors from them, and long story short, I canceled one of the orders, and next thing you know, they're calling me trying to get me to pick up the order I canceled, and then I told them I canceled it, and then it's like, I don't, like, what more do you need me to do? Walk in, steal the money out of your cash register for you to be like, oh, I'm like, yes, stop calling me about my flow. I don't need it. I canceled it weeks ago, my champ. Anywho, all right, it's been a beautiful day. We've crushed it once again. We accurately predicted the world's largest globally traded ETF in the world, mind you. So you can't really do a whole lot better than that, I would assume. So with that being said, I will catch you guys back at tomorrow's Saturday, so I won't. I will catch you guys back on Monday morning. Again, sorry I wasn't around for the past couple days. You guys know I was traveling. Computers are all jacked up and broken. Long story short, catch you guys back tomorrow. Nope, sorry, Monday morning. Cheers. Have a good one.